Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by your resource, North Central Florida, for a common sense approach to planning. They've been named Best of the Best in Financial Services 7 years and running by the readers of the Lake City Reporter. The team from Gulf Coast Financial Services and founder CEO John Kuykendall here with us as our resource as always. John, a lot going on in the financial world. A lot of people have some big concerns with what we see happening.
Well, that's true, Peter. A lot of people are concerned, and they should be, because we're having a whole bunch of things hit us here at once. We know that taxes are going to go up. We know that that's a problem because we've seen it. We've seen the proposals. We know that something's coming out. Also, we've seen the inflation, which has been a higher number than we've seen in recent history. I think we probably have to go back to the early 80s, late 80s, when we had the runaway inflation before people really got concerned about inflation. But it's different. I tell you, there's always something new coming out, whole different world these days.
Well, from what I have heard and read and seen about the proposed tax law changes that are sort of wrapped up in the infrastructure bill, I don't know if this is insidious or kind of genius, John. What they are talking about is, as I understand it, making the tax law changes retroactive to the beginning of the year so that they are trying to basically avoid a mass market sell-off if they left people a window of opportunity to get out under the old rules.
Well, that's true, Peter. That's what I've heard, is that these things are going to be retroactive back to the first of the year. So we won't have a chance to take advantage of some of the things we could do, like unloading a stock that we have a heavy capital gains in, or getting, re-diversifying our company, doing other things, because we may end up paying those taxes anyway. I think I read the other day that this had been done in the Clinton administration once. And it's the only time in history that I can remember that we haven't had a grandfathered period. So it's quite interesting the way they've done this. And you got to give them credit. It does take away a lot of the planning and things we could do to avoid higher taxes. But higher taxes are coming. We've said this for the last 2 years, ever since we did the tax change in 19. So we know it's going to happen. It's the lowest taxes in history, the highest inflation that we've had recently. So, and we have more debt now than we've ever had in the history of the country. It goes back to the Great Depression, actually, when our gross national product was leveraged as much as it is.
Yep. I've seen a lot of, I will call it scare tactic marketing, saying that they're coming for your IRA. And when I hear people talk about this, I get the sense that they feel like it's just going to be confiscated. And I sort of think to myself, well, they don't have to confiscate it. All they have to do, because we've made the agreement to defer and delay paying taxes and to pay taxes later, all they have to do is change the tax rates and rules between now and later, and they've effectively confiscated more of our money.
Well, that's true, Peter. I see that. I get those emails too every week. Started back probably in June. That, June such and such, your money was going to disappear. The government was taking it. And then it was July. Then it was August, September. This has been going on for some time now. All it means is that the government will take more of our money. But the thing is, hopefully, because we've had these good markets, we've actually made more. And so it hurts, but it won't hurt as much as it could. There's nothing we can do about it. We have to live with what we're given. And so we just do the best we can to pay our taxes and to get by. But this is, when I heard that, I couldn't believe it. And I did some research, and that's when I found out that it did happen during the Clinton administration, but it was kind of like a non-event.
Yeah.
I mean, Peter, we're going on 30 years here in this business. In fact, Next April is our 30th anniversary. And so I've just about seen it all. And I know that, cycles do repeat themselves. And so here we go again. And we'll learn to live with it and make lemonade out of the lemons that are being provided to us.
Well, how should wage earners as well as retirees plan proactively given this kind of new paradigm and set of circumstances that we are in, John?
Well, Peter, if you're a younger person and if you still putting away money, life insurance now, the new universal or indexed universal life, is a great way. The tax laws haven't changed. That money is passed at death tax free. It also has the ability to grow cash value that we can get our hands on. And as long as we don't cash in the policy, there are no tax consequences. So that's great for a younger person. For an older person, we need to be making sure that all the dividends and the capital gains we're paying, we get it at the lowest possible rate we can, and we need to diversify our portfolios to take advantage of some of the things we have. They're getting fewer and fewer advantages, but there are still some things that we can do, and we need to be careful on how we're taking our money out of our IRAs if we're in retirement, because there may be a way that we can minimize our taxes by doing other things. I have a client, and I've talked to her about not taking money out of her brokerage account because we've already paid taxes on that money, and not take money out of her IRA because we got to pay taxes on it. So those are some of the things that we can do. Haven't convinced her yet, but we're still working on it.
Got to weigh the lesser of two tax bills there, I suppose. And
hopefully if we hold out long enough, maybe taxes will go back down. So I don't know. Hopefully we won't get back to 1945 when the highest tax bracket was 96%.
Well, I have seen charts that show on average over the history of our country and our tax rates, the average highest tax rate has been above 50%. And I know we're well below that at this point in time. So historically, we are still low. But these changes, John, they're pushing it back up in that direction. And as you mentioned, it may make the case for the tax benefits and the cash value in life insurance that much stronger.
It may, Peter. And also, I think if you can do a Roth instead of an IRA, pay the taxes now and then let it grow tax-free, that's certainly something we should do. Roth conversions, even though we're going to if these things are retroactive, we're going to pay more now, but it would be better off to go ahead and do that than to wait and see where taxes are going in the future.
I almost think that they should scrap the tax code and just start over and simplify it. I know it's 70,000 plus pages, but I worry that what they come back with would be even worse than what we have now. So another big issue, John, that we are hearing a lot about, that we are worried about, the potential for a market correction. Now, the market's been fantastic for more than a decade, but because it's been so fantastic, I think a lot of investors have it in the back of their mind that the possibility of some kind of cool down, downturn, bear market is real, and we've got to be prepared for it.
Well, this is the longest bull market that we've had in history, certainly thanks to COVID, where we got a correction last year in 2020. And then just the way the market's behaved in the past, we've had little mini corrections, but certainly we're due for a big correction. And I think eventually we're going to have one. But if we look at history, that's part of life. And so the market will correct itself and then it'll come back. What you have to be concerned about if you're a retiree, you don't want to pull money out in a down market because that just makes your money go away quicker. You want to have other reserves, and certainly we need to take advantage of other things that we can do other than take our money out of the market if we're there.
Another headline that we are hearing about, raising a lot of concern and eyebrows and prices, inflation. John, this is something that we know is kind of ever present. It's just there are times where it doesn't make as much of a difference, and then there are times where it seems to make a big difference very quickly. We are in one of those times right now. How do savers and investors cope with inflation?
Well, part of the problem is we're coming out of the pandemic where, our country shut down last year. We're still feeling the effects of that going into the end of the year here. And so with the labor market shortage, with companies ramping up, having to ramp up from when they were shut down, the loss of labor, loss of skilled workers, all that has created a shortage of supplies and materials, which has driven cost up, in addition to all the government spending and the stimulus bills and all the other stuff, which is driving inflation up. It's something we just have to live with. Historically, our inflation rate before this year was over 3.5%. So we've had inflation all along. We just haven't really had the emphasis on it this year as we have this year because of all the stimulus bills. The government's spending money like there's no tomorrow, and eventually we're going to have to pay that back. So as long as interest rates stay low, it works good for the government because their debt isn't that much. If interest rates go up, then the government's going to owe more. That's going to create more problems. That's just something we got to live with. But to take advantage, you can't leave your money in the bank at 1% or less than 1% and have a 5% inflation rate and say that I'm breaking even, Peter. That doesn't work.
Yeah, well, if you are a client already of Gulf Coast Financial Services, you know that the team is proactive in providing ongoing guidance and monitoring of your plan, of your accounts, of your investments. If you're not yet a client and would like to see that difference, John, a lot of planning goes on in the fourth quarter of the year. You mentioned we're rounding home here. Now's really the time to be strategic.
Well, that's right, Peter. We're taking the approach that we want to review our clients' accounts, take a look at their taxes, work out our projection for this year on where they are, and then see what we can do between now and the end of the year to kind of reposition things. So certainly now is a great time to come in. We may not have all the answers on the new bills and what's happening, but certainly we can look at the tax rates, run their tax analysis, do a financial plan for them. We'd love to do that. And to help them just get situated for the end of the year. We talk on this show that income planning is what really is required in retirement. And we can't retire or live if we don't have a plan. So the best thing to do now is to start, get your ducks in the row for the end of the year, and let's work into next year and see where we can go to make this thing work for everybody.
And every service deserves some expense, and we can expect that. But if we are paying for advice and guidance and money management, John, those are the kind of services, the routine maintenance, the upkeep of the plan, the evaluation of meeting milestones and progress that we deserve for the fees that we may be paying, because fees do matter as well.
Well, that's right. Fees are certainly a great part of our returns. A lot of people don't worry about the fees they're paying because they are making enough money that they're just hidden somewhere. But fees will eat away your retirement. And so what we need to do is make sure that we understand our fees, we understand what we're paying, and we understand, how that's affecting our overall return. It's something that we take into consideration here when we look at the accounts, when we do the review, and certainly we'd be glad to do that for anybody.
Well, if you'd like to know if you are overpaying, or if there are opportunities to better control that tax liability, or if there are steps that you can take to better protect yourself if there is a market correction anytime into our near or not too distant future, or how to make sure your money is doing its work to keep up with inflation and its purchasing power. Those are the kind of big topics that John Kuykendall and his team there at Gulf Coast Financial Services can help proactive planners to address. All you need to do is pick up the phone, give a call, 386-755-9018. That's 386-755-9018. Be in touch with John and the team. Best of the best in financial services, as voted by the readers of the Lake City Reporter, 7 years and running. You can give them a call and find out why. 386-755-9018. 386-755-9018. You can also visit online, gulfcoastfinancial.net, gulfcoastfinancial.net. John, lots of freebies and reports and giveaways and information there to help people be more educated and make better decisions as well.
Yeah, we spent a lot of time and energy on that website, Peter, trying to make it as user-friendly as we could, have as many calculators on there, a lot of articles about different things, taxes and all that. Plus, there's a way on there to contact us. So if you need us, just get on the website, send us an email and we'll get it that afternoon.
And we do get contact on that website. And in fact, in a future edition of the program, maybe covering a few of the questions that we have seen submitted several times. And we'll talk about a few of those questions and give some answers for folks that just wanted to get a direct answer to their question on the radio here. So be sure to tune in for this and, of course, all future episodes of Financial Focus. Like, subscribe. If you find the information valuable, share it with friends, neighbors, loved ones, co-workers that may be concerned about these issues that John Kuykendall and his team help address each week here on the program and each week there in the office at Gulf Coast Financial Services. John, always a pleasure. We appreciate your guidance and the time and perspective that you provide.
Thank you, Peter. Great to be here. Have a good week.
Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.